Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 under the radar tech stocks rated unanimous strong buys. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. The tech sector is very popular amongst investors as AI advancements continue to drive growth, and everyone is very familiar with big names like the Magnificent Seven. But today we're going to take a look at a few stocks that get a little less time in the spotlight, but they do come in with all buy ratings from Wall Street analysts and price targets that would imply some double-digit upside potential. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's stocks using the TipRanks stock screener. Found right underneath the screener menu, we put in a few different filters today, including double-digit upside potential, a strong buy consensus, the tech sector, and I wanted a PE ratio below 25. That gave us a list of companies down below. Just before we dive into these tech stocks, I wanted to let you guys know about TipRanks' 4th of July sale. Right now, you can get 50% off premium and ultimate subscriptions. So if you've been wanting to unlock some fantastic investment research tools, now is the time to do so. Head on over to tipranks.com or follow links in the description down below to take advantage. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into today's stocks. First up, we're taking a look at Adeia. They trade under the ticker ADEA, currently priced at $14.64. The stock has gained 6.5% year to date, and in the last 3 months has climbed 29%. Adeia is a research and development company specializing in intellectual property licensing. They develop and license innovative technologies primarily for the entertainment, media, consumer electronics, and semiconductor industries. Their portfolio includes solutions for pay TV, consumer electronics, connected cars, media platforms, and more, enabling companies to integrate advanced features like video streaming, audio processing, and connectivity. In their last quarterly earnings report back at the start of May, they did come out with an earnings beat, a slight miss on revenue, and reiterated their full-year guidance. They saw significant new customer acquisitions and robust non-pay TV revenue growth. They did see some increased litigation costs and challenges in the pay TV market, but their positive financial guidance and strategic focus on growth areas mitigate these challenges. Just last week, a 5-star analyst from Roth Capital initiated coverage on the stock with a buy, saying that the company is poised for recurring sales acceleration as over-the-top and next-generation semi-hybrid bonding solutions license and commercialize. They believe Adeia's semi-opportunity is meaningful as next-gen data center and AI penetration accelerates in 2026. Their stock has 4 current analyst ratings coming in as a unanimous strong buy. And the average price target of $19.50 implies an upside potential of nearly 32%. Looking at those ratings down below, they range from 15% upside to 75%. Second on our list today is Innodata. They trade under the ticker INOD, currently priced just shy of $50 per share. Year to date, they've climbed 25%, and in the last 3 months are up about 60%. Innodata is a data engineering company that specializes in preparing high-quality training data for AI and machine learning models. They provide services like data annotation, collection, and transformation primarily for large tech companies, including 5 of the Magnificent Seven. Their solutions support applications in generative AI, natural language processing, and other AI technologies. The company has seen huge growth in this past year, and in their latest earnings report, they came out with both an earnings and revenue beat. Revenue climbed 120% year over year, coming in at $58.34 million. During the quarter, they also had significant progress in strategic growth initiatives, including new customer wins and account expansions across 4 dynamic solutions area, and ended with a strong cash position at $66.6 million. Innodata is forecasting 40% revenue growth for 2025, and weighing in on the stock is a 5-star analyst from BWS Financial, saying that the 2025 guidance shows a glimpse into a business that is not slowing down. The company is now lined up for the possibility of exceeding $300 million in revenue in 2026, which should give the shares greater reasoning for trading at a higher valuation. Innodata has 4 current analyst ratings coming in as a unanimous strong buy. The average price target comes in at $69, implying an upside potential of 38%. Looking at those ratings down below, they range from an upside of 16% up to 50%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Payoneer. They trade under the ticker PAYO, currently priced just shy of $7 per share. They are in the green in this past year, but year to date, the stock has actually fallen 30%, climbing back more recently, gaining over 11% in the last 3 months. Payoneer is a fintech company providing cross-border payments and financial services to small and medium businesses, freelancers, and digital entrepreneurs. Operating in about 190 countries, they offer a platform for sending and receiving international payments, managing multi-currency accounts, and accessing funds through cards or bank transfers. Their services simplify global commerce for clients like online sellers, marketplaces, and service providers, enabling efficient transactions across borders. In their most recent earnings report, they did come out with an earnings beat, but fell 1 cent short on earnings expectations. Revenue grew 16% year over year, and their adjusted EBITDA was $65 million, with a 27% margin, marking their highest adjusted EBITDA quarter in nearly 3 years. While there was some uncertainty around global trade and tariffs, the company is strategically positioned to navigate these challenges. Recently weighing in on the Payoneer stock was an analyst from William Blair. They said despite the challenges posed by the evolving tariff situation, Payoneer's internal execution remains robust and its competitive stance is well maintained. Their focus on extending its business beyond core marketplaces and into higher-yielding accounts payable solutions is another reason for their positive outlook. The stock has 6 Wall Street analysts all currently rating it a buy. And the average price target of $9.50 implies an upside potential of 36%. Looking at those price targets down below, they range from an upside of 14% up to 72%. So that is a quick look at 3 under-the-radar tech stocks, all coming in with unanimous strong buys and some pretty attractive upside potential. Let me know your thoughts on these companies and if they were on your radar before, and which other tech stocks have you excited. I love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.